You want to get started investing, but you're not sure how. Well, we're going to help you. Come be with us at our event. It's all about investing. I'm going to leverage my 25 years of experience and help you get started, answer your questions, and inspire you to take your first step. Come be with us. What do we have in store for the year ahead? Well, looking at where we are right now and what's going on sheds great insight on what we should expect in the upcoming year. Let's be clear, my own personal prediction of the real estate housing market for 2022 is that we will continue to see increase in prices. I believe that we are going to see in the upcoming year is very similar to what we experienced in 2021. Prices going up, interest rates still remaining low, although I do believe we'll see some increases in interest rates, but relative to historical rates, they'll be relatively low. The lack of inventory, the high demand of buyers, and low interest rates are a sure sign of the housing market continuing to increase. According to a recent report from the National Association of Realtors, growth in the housing inventory has slowed over the past decade in the aftermath of the 2008 housing crisis, creating an underbuilding gap of 5.5 million to 6.8 million housing units across the country since 2001. What else is happening that renders a positive real estate forecast for 2022? Rents and housing prices continue to increase due to the low supply and high demand. We're at a 4.2% unemployment rate, which closely matches the unemployment rate back in March of 2020 before the pandemic started. Job creation, new jobs coming onto the market has mostly created to increase month over month since the pandemic hit, but we are still not back to normal. We're about 4 million jobs short. The total non-farm payroll, which is the total number of U.S. workers in the economy that excludes proprietors, mostly has contributed to the rise since the pandemic hit. This graph shows the number of payroll jobs in the U.S. rising, but not quite back to where we were prior pandemic. We see a surge of home sales in the pandemic, and this year was the most amount of home sales in 2021 than number of homes sold per year than in the last 15 years. Median home prices have soared to an all-time high of over $400,000. NAR asked 23 real estate economists and experts about their forecasts on inflation. Here's a list of the experts and economists which they surveyed. The average was 4%, which by historical standards is still high. Ideal inflation is 2%. However, their prediction of 4% inflation is double the ideal rate, but not as bad as the anticipated 6.8%. What about home price appreciation? The average consensus is that home prices will rise 5.7% from our expert panel. But remember, last year they predicted home prices would increase by 6.8%, but the actual price increase for 2021 was 20.3%. So let's hope we see higher numbers than they anticipate. Here you see one expert on the negative end of the median appreciation decreasing by 10%, and on the positive side, two experts predicting as high as 12% median home price increase. The median panelists agree that the Federal Reserve will be raising interest rates 2 times over the next year, that the average is the consensus. The average being 2, with 11 experts predicting that, but 8 experts are predicting only 1 interest rate hike. It's important to understand that from an affordability standpoint, a consumer buying a home today versus a year ago, their payment is going to be less now, even though the prices have gone up since interest rates are so low. So based on all this data, with interest rates still incredibly low, and with a number of new homes across the country that are still completely depressed and needing more homes to support buyer demand, as well as fewer number of homes hitting the market, my guess is that the real 2022 real estate forecast is going to be hot, hot, hot. Pretty much a replica of what we saw in 2021. There was a lot of demand and lack of inventory, but prices kept creeping up. Buyers were willing to pay more for homes than what homes were listed for across the board, and giving sellers pretty much anything they wanted. Sellers had all the leverage and were taking offers with little or no contingencies, and the terms of the contract mostly were in the seller's favor. In my opinion, based on the data, this year is going to be exactly the same. So, for a quick recap, on a positive note, the economy looks good, the tide is rising. Buyers want to buy, and they want to buy a lot. Rates are low and should remain low relative to historical rates. The market is incredibly attractive to sellers. Sales will stay competitive, solid, and strong next year. and home prices will keep rising. The bad news is that it's dampening our housing market. We're still not building enough homes, and there are more buyers than there are homes. Obviously, the pandemic has created challenges for all of us. It's getting harder and harder for first-time home buyers to enter the market because of the increase in prices and low inventory levels. Hope this was helpful, and if you're looking for more real estate updates, be sure to subscribe to my YouTube channel. This is Ann Curry with Ann Curry Homes, giving you great quality information so you can make a great quality decision.